When most people think about investing in the stock market, they imagine needing thousands of dollars to get started. But what if I told you that you could begin building wealth with just $50? Yes, $50. You don't need to be a millionaire to start investing. You just need the right tools, strategies, and mindset. First, let's tackle a major misconception. You don't have to buy entire shares anymore. In the past, owning a stock like Amazon or Tesla required hundreds, sometimes thousands, of dollars because you had to buy a whole share. But thanks to fractional shares, that's no longer the case. Fractional shares let you invest in a small piece of a stock. For example, if a single share costs $1,000, you can still buy a portion of it with just $10 or $20. This makes investing accessible to anyone, regardless of how much money they have. Now, where do you begin? The first step is choosing an investment platform. There are many apps and brokerages designed for beginners, and most of them let you start with no account minimums. Popular options like Robinhood, Acorns, and Stash are incredibly user-friendly and even offer educational tools to guide you. If you're looking for a more traditional option, platforms like Fidelity or Charles Schwab also support fractional shares and charge minimal fees. The important thing is to pick one that aligns with your goals and is easy for you to navigate. So, you've got your $50, and you've chosen a platform. What's next? Deciding where to put your money. For beginners, one of the best places to start is exchange-traded funds, or ETFs. ETFs are collections of stocks or bonds that you can buy as a single unit. This means that when you invest in an ETF, you're spreading your money across multiple companies, reducing your risk. For example, an ETF that tracks the S&P 500 gives you exposure to 500 of the largest companies in the United States. It's like buying a little slice of the entire market, but maybe you want to go a step further and invest in individual stocks. If that's the case, start by looking at companies you know and trust. Think about the brands you use every day, the coffee shop you visit, the phone in your pocket, or the streaming service you binge watch. Investing in businesses you understand can give you confidence as you start your journey. Remember, you're not just buying stocks, you're buying a piece of the companies you believe in. Now let's talk strategy. One of the smartest ways to invest, especially if you're working with a small budget, is dollar cost averaging. This simply means investing a fixed amount of money regularly, say $10 every week or $25 each month. This approach helps you avoid the temptation to time the market, which even experts struggle to do. By investing consistently, you'll buy shares at different prices over time, averaging out the cost and reducing the impact of market volatility. Another tip: reinvest any dividends you earn. Dividends are small payouts that some companies provide to shareholders, typically quarterly. Instead of taking that money out, most platforms let you automatically reinvest it into your portfolio. This helps your investments grow faster because you're earning returns on both your original amount and the dividends. It's a classic example of compound growth in action. Of course, it's natural to wonder, is investing with just $50 really worth it? The answer is a resounding yes. Here's why. Investing is as much about building habits as it is about money. Starting with $50 might not seem like much, but it teaches you how to navigate the market, understand your investments, and develop the discipline to keep going. Over time, those small, consistent investments can snowball into something much bigger. It's also worth noting that even small amounts grow over time thanks to the power of compounding. Imagine you invest $50 a month for 10 years at an average annual return of 8%. That's over $9,000, not bad for starting small. And if you keep investing for 20 or 30 years, the results could be life-changing. Finally, remember that investing is a marathon, not a sprint. The goal isn't to get rich overnight, it's to build wealth steadily over time. The market will have ups and downs, but staying consistent and keeping a long-term perspective is the key to success. So here's your game plan. 1. Choose a beginner-friendly platform that supports fractional shares. 2. Decide whether you want to invest in ETFs, individual stocks, or both. 3. Set up a system for regular contributions, even if it's just $10 a week. 4. Reinvest any dividends you earn to maximize growth. 5. Stay patient, stay consistent, and watch your money grow over time. Starting with $50 might seem like a small step, but it's a step towards something bigger. The most important part of investing isn't the amount of money you start with, it's starting. So, don't wait. Open an account, put in your $50, and take that first step toward building your financial future today.